Hello, this is Mike Swanson. I run the website wallstreetwindow.com, and the odds are that you're watching this video because you got a notice about it by being a subscriber to my free email list. Now, if you're not on the free email list, then click the link associated with this video because you'll want to get all my future updates, because we're in a fascinating time now in the financial markets. Take a look at this. What you're looking at is a chart of gold. Gold is soaring. Gold just made a new 52-week high. It's actually a high in the past 7 years. And gold stocks are soaring. This is a chart of Newmont Mining. Just made a new 52-week high yesterday. And when you look at the stock market and most stocks inside the stock market, we're getting a bounce from the March lows, but the market averages are below their 200-day moving averages. Most stocks remain well off of their recent highs, but Newmont is making a new high. Most mining stocks are doing the same thing. Gold and mining stocks are beating the stock market. And there are some critical reasons why this is happening, and you don't have to look very far to see some of them. So, for instance, this is a recent edition of the Wall Street Journal, and there's multiple stories that explain what's going on. At the top headline, millions more file jobless claims. The economy is basically in a depression when we have predictions of GDP growth shrinking by up to 30% in the first half of this year because of all the shutdowns going on, and unemployment is probably going to be over 20%. And this has caused the Federal Reserve to engage in zero rates and announce a policy of unlimited quantitative easing. But last week they went beyond that, as this second story on the front page says, headline, Fed's new loans are broadest ever. So in 2008, the Federal Reserve did a quantitative easing program to buy mortgage-backed securities, bailed out Wall Street banks. It was $1 trillion operation. Now, what the Fed announced last week is something that no other central bank has ever done. In fact, it actually goes beyond the charter of the Federal Reserve itself. And what they announced was they were not going to simply buy mortgage-backed securities. They're also going to get into the corporate bond market by purchasing not simply high-grade junk bonds, but low-grade junk bonds, including junk bond ETFs, bailing out people that are holding these ETFs, or at least preventing them from experiencing mega declines or collapses in them, and from these companies from going under. So in effect, the Federal Reserve has become the bond market. But to do this, it's going to put the United States deeper into debt, completely explode the deficit. Because what is going on is the Fed is printing money to buy bonds from the U.S. Treasury Department, which is in turn using those proceeds to engage in its own bailout operations. And these are going to be continuous affairs now for the rest of the year. We had one bailout bill over $1 trillion. Now there is discussion to make a second bailout bill closer to $2 trillion. And the President, Donald Trump, did a tweet talking about doing a $3 trillion deficit, $3 trillion infrastructure bill. And that goes to the bottom half of this front page of the Wall Street Journal, which says, coronavirus crisis legacy, mountains of debt. The U.S. government is now poised to have a larger debt to GDP than has been seen since the heights of World War II, when the government spent money to fight World War II. So that's the size of the debts, and this article explains some of the negative impacts that will come from this. But one impact is rising gold prices. Gold is going up because the deficit is now poised to explode, and it's breaking away from the U.S. stock market averages. It's very difficult now to buy bonds and make any return on your money. So there are very wealthy investors who are now taking money out of what they would put into the bond market and into the precious metals world. And there's also traders who are now getting into gold, silver, mining stocks, because that is beating the market. That is now the place to be, and it's going to be that way now for the next couple of years. So if you want to beat the market, the best way to do it now is to get involved in gold, silver, and the top mining stocks. And one mining stock I like, in particular, I made it my top stock pick of the month, is Aftermath Silver. It trades as AAG on the Vancouver Stock Exchange and AAGFF on the US OTC market. This stock came down from a high it made in January. It had a tremendous run up last year. It went from about 7 cents to 50 cents on the Vancouver Stock Exchange, and then it corrected back down and really took a tumble when the stock market got hit in March. But that drop in the market provides entry points now to get into the best stocks. And I got a position in the stock, and I think we got that March drop has created an opportunity in it to have a similar move up like we saw last year. So I did a post about it a couple days ago, sent an email out about it too. And if you're not on my email list, click the link associated with this video, and you'll not only get on the list, but you'll get my latest update with more details on this stock. So interesting times we're in, and be talking with you later.